My name is Johannes Hesche. I am executive partner and I head the qualitative portfolio management here at Acatis.
Please briefly explain the fund concept.
We wanted to create a fund that, through the use of bond and stock market investments, allows for stable medium to long-term returns. And for each of those asset classes, we have chosen a fundamental approach. That means we want to only invest in bonds if they yield roughly a 6% return annualized rate. And for stock investments, we want them to compound at roughly a 10% annualized rate of return.
What does event stand for in the fund name?
On capital markets, there are several special situations that occur from time to time. Just think about a company that is being taken private by a large investor, or two companies that are trying to merge. Whenever a situation like that comes about, there is always a possibility to arbitrage away the difference between the taking private price or between the merger price. And these special situations allow for a better risk-adjusted returns than just purely investing into a stock, and therefore they enable us to let you sleep soundly. Secondly, we not only invest in equities, but also invest in bonds. And for a bond, such a special situation would mean that we invest in a supranational organization that is practically guaranteed by the government, however, still yields higher rates of return.
What criteria do you use to select securities for the fund?
There are two types of securities in the fund that we try to select. First, there is equities. And whenever I look for equities, I think about an old Buffett quote: I never attempt to make money on the stock market. I work on the assumption that they could close the market the next day for the next 5 to 10 years and still make money out of these investments. So that means that we only select companies that can earn significant returns on their cost of capital and therefore compound over the long term. And for bonds, we look for special situations that allow for a higher yield than we would normally get in any other way. So that means, for instance, since we are unconstrained, whenever nobody wants to buy any convertible bonds anymore, we are there to buy said convertible bond. Or whenever there's a special situation where, for instance, the German government guarantees a bond of a local bank and said bond pays significantly above what other bonds from the German government would yield, we are there to buy said bond.
What makes the fund unique?
The fund is unique because a lot of other multi-asset funds oftentimes weight their exposure to equities or to bonds through their overall idea on whether the market is expensive or cheap. We don't do that. Every investment that is in the fund has been thoroughly analyzed and stands on its own. And this approach allows us to completely do without the use of any derivatives or other financial alchemy such as certificates. And therefore, what you see on the fact sheet is what you get. So what you see is what you get.